Hello everyone and welcome to ICM's midday market update. So today we had the series of economic indicators coming out in the morning that could give us a hint on how the economic performance was in Europe in the past couple of weeks. So we had the manufacturing and services PMI, the preliminary reading for the manufacturing and services PMI for November, and most of the indicators they came out better than expected, except for the services PMI in Germany and the Euro region as a whole. But in the United Kingdom, we had stronger readings, and this is just showing on the pound strength across the board. So these economic indicators they gave some optimism for traders that the current impact or the impact of the current lockdown in the Euro region isn't as feared to be on the economic activity. So this is just giving some optimism in the market. So let's go to the MetaTrader 4 platform. You can see here that most of the dollar is just weaker across the board. The euro dollar started to break out of its previous consolidation zone that we've been highlighting for a while. So it was stuck between 1.1890 and 1.1810, almost 1.18. So we had this range, and now we're having a bit of a break upper of this range. So the next resistance that we could have that we should be looking to is almost near 1920. What could be coming in play, since we witnessed a couple of channels being there, so what could be coming in play is just another move with a channel here. So most of the move back, it was a bigger channel. So what could be coming for the current move is just similar expectations. So if you just draw a trend line combining the previous bottom, you can just see how legit it is. 1, 2, and 1, 2, 3, and we got 4 points on this trend line, while on the upper hand or the other side of the channel also we had 2 retests, which were coinciding also with the previous resistance zone, and the current uptrend or an extension towards the upper side of the band of the channel could be coinciding also with the previous resistance zone, which is almost around 1920. So watch out for this formation. For a bear scenario or alternative scenario, we definitely need to clear back below the trend line and drop further below 1850 to have a bit of selling momentum, and then we could be retesting prices lower than 1.18. So this is for the euro dollar. Moving to the British pound against the US dollars, is just a clear uptrend for the British pound. We were just highlighting previously this channel, and we had a clear almost break. We're just trading at the top of this channel currently. So watch out how this will come play. We're at the top, and this would just suggests or justifies the recent price actions that we're witnessing for the past 2 hours. So we had a sharp movement higher. You can see how the market was rallying, higher highs. We had this consolidation movement here, and then the market was able to break out of this flag formation almost, and then the market continued higher with a clear extension. So this is just why we are witnessing some resistance here. If we just need to highlight some previous key levels, we can just go to the bigger channel. So this is the channel that we are almost talking about, 1, 2, and you can see here 3. But and for the previous tops, just a bit far. Currently, it's near 34.75. So this could be another top that we could be retesting. Also, if we're just throwing throwing out some channels on the chart, you can see here, if this is a channel that we're currently trading at, so also the top band of the channel could be coinciding with the previous resistance, similarly to what we're seeing on the euro. If we just want to look out for an alternative scenario, definitely before having the first signs of reversal, we need to drop below 33.30 at least, and then we just can look for the break of this trend line that's combining the previous bottoms. So a clearance below 133, 133.30 could lead to further losses to the pair. And the dollar against the Japanese yen is just consolidating near its previous lows. So we had this sharp movement lower, and now we're stuck near this key support that held last week. So any break below the support could be significant, and maybe we could be retesting the previous low of almost 103.20. While for alternative scenario, we need at least to edge higher towards 104.20, 104.35. If we were able to settle above these two levels, we could be then looking for another retest towards 105 level. The dollar against the Swiss franc, also a similar formation to the dollar against the Japanese yen. So if you can just compare this formation here, and also we're witnessing the same, though the yen was stronger against the dollar previously, but currently we're almost stuck in the same formation. So almost now we're at the key support. We're trading near it, where any drop could add to the losses and retest to previous low. We can just draw the Fibonacci retracement here. You can see that we're struggling at the 50%, and the break could put the coming Fibonacci levels as targets for traders. So this is for the dollar against the Swiss franc. While any break back above the previous trend line could lead to a retest towards 91.35, as long as we're just below it and we were still posting lower highs. So this could be a bit bearish for the pair. The Australian dollar is just also still consolidating between 73.40 and 72.20 area, but still edging higher in the past couple of days. A series of higher highs and higher lows was clear in the past couple of trading sessions. So watch out how this could continue. If we just were able to break back below the trend line, this could be bearish for the pair, and maybe we could be staying inside this range again for a while. While if we just continue the same path with the dollar weakening and risk sentiment is just strengthening across, so this could lead to a retest towards the previous top of almost 74.15. So these are the key levels. You can see how critical breaking above 73.40 is. You can see previously how solid it was, and how many times we tested this resistance and then faltered at it. So watch out for any break above 73.40, because it could clear the path towards 74.10. The New Zealand dollar against the United States dollar. The New Zealand dollar is just among the strongest currencies across the board, especially with New Zealand outperforming rival economies with how they treated the coronavirus, and it didn't affect much of the economic activity. Especially also another thing that we can hint for is the central bank fast reaction to COVID, which just also supported the economy to recover it faster. We're just struggling near the top, the trend line formed by combining the previous tops. So we're just looking for this area as possible resistance. Previously, the 0.6930, 0.6970 was key resistance area. So any break above it could lead to an acceleration higher towards the 70 psychological level. However, what we could be looking for is just another range of trading between 68 and 72 on the long run, similar to the one that we witnessed between 65 and 65 and almost 67 previously. So similar to this consolidation form, we could be expecting some consolidation near these stops. In terms of levels, definitely in order to stay bullish and expecting further highs, we need to remain above the uptrend line combining these previous bottoms, and just watch out for the break above this trend line also combining the previous tops. So these bottoms and tops, they're just signaling for us the shape that we're currently trading in. So this is all for the New Zealand dollar. The dollar against the Canadian dollar, it's just also weakening, but still on the bigger picture, we're still on the same range. 30 is just acting as key support, so we need to break below it in order to see some further bearishness and maybe a retest towards 29.85, and on the bigger picture towards 29.27. While any reversal or false break and then a reversal higher above 31.20 could lead to a bit of a bullish scenario on the pair, and maybe retest towards the 132 level. So this is the formation, the sideways trading that we're trading in for the dollar against Canadian dollar. So watch out for any break out of this consolidation zone. On gold, the price is, if we just go closer on the hourly chart, you can see how exactly we're still trading in another channel. So previously the drop was a key channel. So we had this channel trading, and then we had this breakout to form just another down channels. So we had the sharp move following Pfizer's headline, and then we had an ascending channel. This drop took place following Moderna's headline, and now this is just forming another channel to trade purely technically. So it's just another formation that you can watch out for. In terms of key levels, you can just highlight the previous bottom, 1850, 1855 as key support, while any break above the downtrend line combining the previous stops could just be bullish for gold, and maybe we could be poised to retesting at least 1885, which was key support and key resistance. You can see how many times this level was critical for gold traders. So any trade back above the trend line, and then could pose some risk at 1885, and a breakthrough 1885 could lead to a retest towards 1900 and above. So this is for gold. Silver, almost same formation, so similar to the one that we're having on gold. You can just highlight the previous stops. So any break above the previous the trend line combining the previous stops could be just bullish for silver and raise the chances of a retest towards $24.50, $25 per ounce, while also 2360 continues to be key support zone. 2370, 2360 continues to be key support zone for silver traders. The Dow Jones we're trading inside the range, still the previous area that we highlighted on Friday. 29,530 continued to be key resistance, so it was a support and then resistance 1, 2, and then we started having some selling pressure ahead of this resistance, so it's almost a 50 points range for this resistance being formed. So any further bullishness for Dow Jones should be seen by a break above 29,550, which could lead to a retest of 29,650, 700, and then towards a longer run towards almost 30,000 points. While a failure here could just add the chances of another drop towards 29,200 and then 28,800. These are the key levels if you are trading the Dow Jones. Watch out for how we can break out of this consolidation zone that we've been trading in for the past couple of days. Moving to the WTI. So we highlighted last week a possibility of moving in a channel. So we drew this channel here by using just the trend line combining the previous bottoms, and we highlighted that this area here could be a key resistance area, especially that's coinciding with the previous stop. So and exactly the market rallied towards this area, and we witnessed heavy resistance near the previous resistance area, which led to a further selling, and now oil is back to 42.80. So watch out for any drop back below the previous stop or previous resistance area that held for a while between 42.20 and 42.50. So this area here was crucial for the rally towards a further high. So watch out if we trade back below it. This could add for further tension, and maybe we could be retesting the trend line combining the previous bottoms, which could come somewhere between 41.80 and $42 per barrel. Any break back below the trend line could add to losses, and the drop towards 40.30 or to this trend line could be seen. So you can just draw a trend line combining the previous bottoms. So maybe a retest between 41.30, 41.80. We could be witnessing some support again. So this is all for today's session. Just one thing for oil, if we were able to clear again above the resistance area between 43.30, the coming resistance is near $44 per barrel, ahead of breaking into a new zone that could be the coming range between $43 and $49 per barrel. It could be the coming range to trade in for the next couple of months. This is all for today's session. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this live session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all for now.